Gold versus Bitcoin, the ultimate showdown. This is the clash of the titans in the investment world, where tradition meets innovation. Hey there, investors! Jim Cramer here, ready to tackle the hottest debate in finance, gold versus Bitcoin. It's a topic that's been heating up boardrooms and living rooms alike. It's the classic battle, old school versus new school, tangible versus digital. Gold has been around for millennia, while Bitcoin is the new kid on the block, but both have their unique allure. Which one will reign supreme? Will the age-old reliability of gold outshine the revolutionary potential of Bitcoin? Gold, the granddaddy of safe haven assets, has been a store of value for centuries. It's the go-to asset in times of economic uncertainty, a hedge against inflation and currency devaluation. It's tangible, it's shiny, and it's always been a symbol of wealth. From ancient civilizations to modern economies, gold has maintained its luster and prestige. But then came Bitcoin, the digital disruptor, shaking things up with its decentralized nature and mind-blowing returns. It's a whole new way of thinking about money and value. This ain't your grandpa's investment strategy anymore. Bitcoin represents the future, a digital frontier where technology and finance intersect. We're talking about two fundamentally different assets, each with its own set of risks and rewards. Gold offers stability and a long track record, while Bitcoin offers innovation and high volatility. So buckle up, because we're diving deep into the world of gold and Bitcoin to help you make sense of it all. We'll explore their histories, their market behaviors, and what makes them tick. Whether you're a seasoned investor or just starting, this guide will give you the lowdown on these two investment giants. You'll learn the pros and cons, the potential gains, and the pitfalls to avoid. By the end, you'll be ready to make informed decisions and navigate the exciting, sometimes crazy world of finance. Let's go. Get ready to dive into the ultimate showdown between gold and Bitcoin. Gold, baby. This precious metal has been a symbol of wealth and stability for centuries. From ancient civilizations to modern economies, gold has always held value. Why? Because it's tangible. You can hold it, you can touch it, you can even make jewelry out of it. That tangibility gives investors a sense of security, especially during times of economic uncertainty. When traditional markets get shaky, investors flock to gold. Why? Because it's a safe haven asset. It tends to hold its value or even go up when other investments are tanking. Remember the financial crisis of 2008? Gold prices soared. Why? People panicked and wanted a safe place to park their money. It's a classic case of flight to safety. Gold is the ultimate security blanket for investors. Now let's talk Bitcoin, the new kid on the block. This cryptocurrency has been making headlines with its meteoric rise and occasional crashes. Bitcoin is a digital asset, meaning it exists only in the digital world. It's decentralized, meaning no government or institution controls it. That's a big deal for some investors who are wary of traditional financial systems. Bitcoin is based on blockchain technology, a secure and transparent way to track transactions. This technology is still evolving, but it has the potential to revolutionize many industries. The appeal of Bitcoin? High potential returns. Early investors have made a fortune. But let's be real, it's also incredibly volatile. High risk, high reward, that's the name of the game with Bitcoin. When it comes to investing, it's always good to get different perspectives. So what are the experts saying about gold and Bitcoin? On the gold front, some analysts remain bullish. They argue that gold's historical significance combined with ongoing geopolitical uncertainties will continue to drive demand. Others, however, are more cautious, suggesting that gold's price appreciation might be limited in the coming years. The Bitcoin camp is even more divided. Some experts believe it's the future of finance, highlighting its potential to disrupt traditional payment systems and become a global currency. Others remain skeptical, citing its volatility, regulatory uncertainties, and the potential for market manipulation as major concerns. As you can see, there's no clear consensus. That's why it's crucial to do your own research, understand the risks involved, and make investment decisions that align with your own financial goals and risk tolerance. Section 5, Gold Fever or Bitcoin Buzz. Analyzing recent trends. Let's take a look at recent market trends to see how gold and Bitcoin have been performing. Gold has been a steady performer, albeit not as exciting as Bitcoin. It's held its value relatively well, especially with rising inflation. Central banks around the world are increasing their gold reserves, which could further support gold prices. Now Bitcoin, that's a different story. It's been a roller coaster ride. We've seen incredible surges followed by dramatic dips. Factors like regulatory news, adoption by institutions, and even Elon Musk's tweets can send Bitcoin prices soaring or plummeting. The key takeaway? Gold offers stability, while Bitcoin is all about volatility. Which one you choose depends on your investment style and how much risk you're comfortable with. Section 6. Risk versus reward. Which one's for you? Now let's talk risk. Every investment carries some level of risk, but gold and Bitcoin are on different ends of the spectrum. Gold is considered a relatively safe haven asset. It's been around for centuries, and its value is less likely to be wiped out overnight. However, its returns are generally modest compared to other investments. Bitcoin, on the other hand, is incredibly volatile. Its price can swing wildly, making it a high-risk, high-reward investment. You could make a fortune, but you could also lose a significant chunk of your investment. So, which one's right for you? If you're risk-averse and looking for a stable asset to preserve your capital, gold might be a better choice. If you're comfortable with volatility and aiming for potentially higher returns, Bitcoin could be worth considering. Section 7. Diversification. Don't put all your eggs in one basket. Remember the golden rule of investing. Diversification. Don't put all your eggs in one basket, especially when it comes to assets as different as gold and Bitcoin. A well-diversified portfolio spreads your risk across different asset classes. This means investing in a mix of stocks, bonds, real estate, and yes, even alternative investments like gold and Bitcoin. How much you allocate to each asset class depends on your financial goals, risk tolerance, and time horizon. A financial advisor can help you create a personalized investment strategy that meets your specific needs. The key is to find the right balance between risk and reward. Don't go all in on gold or Bitcoin. Spread your bets and build a portfolio that can weather market storms. Section 8. Practical tips for investing in gold. So, you're interested in adding some gold to your portfolio? Smart move. Gold has been a reliable store of value for centuries and can be a great hedge against inflation and economic uncertainty. Here are a few practical ways to invest in this precious metal. First, physical gold. You can buy physical gold in the form of bars, coins, or even jewelry. This tangible asset can be a great way to diversify your portfolio. Just make sure you store it securely. Consider using a secure vault, safe deposit boxes, or a home safe to protect your investment. Second, gold ETFs. Exchange-traded funds track the price of gold, offering a convenient way to invest without physically owning it. They are traded on stock exchanges, making them easy to buy and sell. Third, gold mining stocks. You can invest in companies that mine and produce gold. These stocks can offer significant returns if the company performs well. Just remember, mining stocks can be volatile, and their performance is tied to the price of gold. They can be influenced by factors such as mining production levels and geopolitical events. Lastly, gold mutual funds. These funds invest in a diversified portfolio of gold-related assets, providing professional management and diversification. They can be a good option if you prefer a hands-off approach. Before you jump in, do your research, understand the fees involved, and choose an investment option that aligns with your investment goals and risk tolerance. Consulting with a financial advisor can also help you make an informed decision. Section 9. Navigating the world of Bitcoin investments. Ready to dip your toes into the world of Bitcoin? It's an exciting and dynamic space, but it can also be quite overwhelming for beginners. Hold on tight, because it's a wild ride. The value of Bitcoin can swing dramatically in a short period, making it both thrilling and risky. Here are some popular ways to invest in Bitcoin. First, cryptocurrency exchanges. These platforms are the most common entry point for new investors. Platforms like Coinbase, Binance, and Kraken allow you to buy, sell, and trade Bitcoin and other cryptocurrencies. They offer user-friendly interfaces and a variety of tools to help you manage your investments. Second, Bitcoin wallets. To store your Bitcoin securely, you'll need a digital wallet. This is crucial for protecting your investment from hacks and theft. There are various types, including hardware wallets, software wallets, and paper wallets. Each has its own advantages and security features. Third, Bitcoin ATMs. Yes, they exist. You can buy Bitcoin with cash at these ATMs, but be aware of high transaction fees. They are convenient, but can be costly. Lastly, Bitcoin funds. Similar to gold funds, some investment firms offer Bitcoin funds, providing exposure to Bitcoin through a managed portfolio. This can be a good option for those who prefer a more hands-off approach. Remember, Bitcoin is highly volatile and subject to regulatory changes. These factors can significantly impact its value and your investment. Invest only what you can afford to lose, and always prioritize security when handling your Bitcoin. Educate yourself continuously and stay updated with the latest news and trends in the cryptocurrency world.